Hey, accounting scholars! We are at the last section for Chapter 8, and we're going to talk a little bit about inventories and when the expenses associated with inventories are recognized. I think you have a pretty good idea of this because we essentially drew several of these examples or applied this kind of logic in our coffee business. But specifically, inventory is an asset when it is purchased. It doesn't turn into an expense until it is sold. And we recognize that expense in a category called cost of goods sold. That is a specific term and something that you should kind of get to across your brain at this point of a business where there is inventory used to conclude a purchase. So in our coffee business, we're going to apply let's say we're purchasing Keurig coffee cartridges. Those, when we purchase those cartridges, those would be considered inventory, would be considered an asset. However, when we sold the cup of coffee, which would basically include a cup, maybe a lid, some sugar, some cream, and the cartridge itself, those inventory items would be recognized as an expense, and they would be called cost of goods sold. So the question then becomes, in the expenditure process, how are these activities communicated to users? Well, one of the primary places to communicate it, as you might expect, is the income statement. In the income statement, you would reflect any discounts that might be lost, any losses on inventory, other expenses that might be associated with inventory. But you'd also obviously have a major expenditure expense category in the cost of goods sold. In the balance sheet, you would have the ending balance of the inventory, as well as the other assets and liabilities, right? Or the inventory account that you would have. And you would have a statement of cash flows. And the statement of cash flows would contain information related to cash paid for inventory and other expenditure process items. So, basically, expenditure process information in the three basic statements that we have used in the past: the income statement, the balance sheet, and the statement of cash flows. Let's talk about you would estimate the cash that is paid for inventory. Now, this is a little formula here, and I want to make sure that you have this in your notes. Memory. So, you would get your beginning inventory, and that essentially is the ending inventory for the period that just ended, but the beginning inventory for the new period. You would add your purchases of new inventory, and that would equal your maximum inventory available. That would be the inventory that you would have available to use the example of the coffee business. Leftover current cups from the prior prior period. You would then add any new purchases, and that would be the maximum number of current cups you would have available. From a cost of goods sold standpoint, you would only reflect those that we use. then subtract those from your maximum inventory available, and you would have your ending inventory. But the cost of goods sold information would go on the income statement, and the end inventory would go on the balance sheet. Now, on the other side, we would look at the accounts payable side of things, and again, that would come off the balance sheet, and you would add then make new inventory, and that would equal, as you would suspect, the maximum amount owed to your pay off some of that, or use cash for that inventory. Then to pay for that inventory, you would then have it in the accounts payable balance, and that would go on your balance sheet. So you look at both of these; they all go hand in hand. Inventory on the balance sheet side, well, your cost of goods sold from an income statement, and from a balance sheet standpoint, when you're ending inventory, this is all reflected in entries on the liability side of things in your accounts payable information. So again, perfect logic, and makes good sense. All right, guys. So we are at the end of our last section here for Chapter 8. We will be having a test shortly on this information, so please review all your videos and your notes. Have a good night.